Avinnash, we'll bring in Avinnash. Talking about we are talking about the macroeconomic data, talking about the IIP, especially when Mr. Jindal was mentioning about IIP related to GDP. How are the markets viewing? Because if we look at the manufacturing growth from some quite a time, it has been a roller coaster ride. Once we see manufacturing growth higher, growing higher, once we see manufacturing growth going lower, the cost of production is sometimes increasing. Overall, how do you think the markets are actually viewing? Because even recently, the RBI governor was also not that satisfactory on the manufacturing growth in this country.
Venkat, clearly I would definitely be a little cautious because recently the core manufacturing data has been quite weak.
True.
And more importantly, I think the kind of commentary the governor gave, I think clearly Mr. Rajan has mentioned that macro indicators are yet weak and core demand across sectors is yet to pick up. In fact, if you look at most of the rate sensitive sectors like construction, capital goods, real estate, I think core demand is still weak. So
Yes.
I think IIP numbers is definitely reflecting that. And my sense is at least for the first half, Venkat, we may see, these kind of softer numbers. The real pickup is expected in the second half of FY16, and hopefully once inflation comes down, we have a good monsoon. I think that could be good trigger points to ensure that corporate activity on the ground starts. So IIP numbers this time are not going to be anything great. The market is aware of this factor. I think what is important is clearly what kind of reforms and what kind of policy initiatives the government announces, because that is something which the market will be keenly looking at.
So markets are aware that IIP numbers might not be at a satisfactory levels, but we'll have to see what impact will it have on the markets as well in the coming days, because this week we are witnessing about the inflation data and also the IIP numbers as well. The discussion will be continued, but before that, let's slip into a short commercial break. Stay tuned.